Right to the Floor show, we have Cetera Investment Management CIO and Director of Research Gene Goldman and Great Hill Capital Chair Tom Hayes. Tom, it's a very resilient market, is it not? And what keeps it going in 2024, or at least till the end of this session?
Well, it looks like they ran the Grinch out of town this year, that's for sure. And if past is any prologue, the next 7 days we could get on average 1.3% gains. Looking into 2024, the average gain for a presidential year is not going to be quite as good as this year, but up 11.28% since 1928. So there's a lot to do, but we have come a long way very, very quickly. So we may see some consolidation in January and February.
I mean, it's just, it defies the odds here, on track for more than 8 weeks of gains in a row. I just look at this and I think to myself, Gene, wow, how much further does this go? We know that bulls get tired. We know they have to take a seat on the bench at certain points, but without any such catalyst, at least at the moment, and I'm surprised that we're not getting a catalyst, what's happening in the Middle East, specifically in shipping. Right. All the shipping lanes through the Red Sea have to be diverted due to safety reasons. That is 12% of global shipping that goes through that route. Why is that not some type of black swan or even a black duck or a black parakeet?
Hey, Liz, everyone's...
Go ahead.
Oh, sorry. Hey, everyone. So everyone's focused on trying to find something that's going to be Grinch-related for Christmas, but we don't see anything. I mean, I know this is definitely an overhang. Clearly, costs are going to rise a bit, especially you're seeing shipping costs rise. But for us, we're saying that 2024 is going to be almost like a Goldilocks to the max scenario. The Dow is hitting a record high. Unemployment rate's been below 4% for 22 months. Inflation's rolling over. Gas prices are now at 1.5-year lows. All good stuff. We're terming 2024 as an opportunistic bull market. Yes, some of the gains from 2024 maybe have gotten pulled into the last month and a half or so. But look at small cap. I loved your graphic earlier about Russell 2000 having a great week. Small cap, mid caps are looking attractive. And those are the areas that we're going to be really focusing on. Plus value next year. Opportunistic bull market next year.
All right, so you don't see huge supply chain implications, at least from what's going on in this risk scenario of the Middle East. All right, Tom, if Gene is right, where do you like these markets at the moment, if not in some of the large caps like Nike, Walt Disney, Boeing, which are the laggards on the Dow at the moment?
Well, Gene is right. Small and mid caps trading around 14 times next year's earnings. Large caps trading about 20 times. So that's where we want to focus. We've got a special name for you. You know I like turnarounds. I gave you Vornado, your audience, in April. We just sold that at a double in about 8 months. We've got another turnaround. Comstock Resources. Jerry Jones owns 65% of the stock. He says his holdings in this business are worth more than the Dallas Cowboys. This is really interesting because the proven reserves, PV10, are worth $15.5 billion.
This is energy.
The stock is trading at $5 billion enterprise value. So if they liquidated it today, this is all natural gas in Haynesville, northern Louisiana, East Texas, you would have a triple.
Yeah, but it has a 174% gain year over year. Why am I buying it at such a high point?
This thing is depressed. This has come off of 20. It's down to about $8 or $9 right now. We think over the next 12 to 24 months, the demand is going to continue to increase. They have shipping through the Gulf, and we want to bet alongside. Jerry Jones's basis in the 65% is around $7. You can get in pari passu with him and ride the wave.
Well, his Cowboys did not look so good the other day. Gene, let's not ignore what's going on in bond land, and I'm talking treasuries. The markets just, I want to say in the last hour, all turned red. They're back in the green at the moment, not by much, though, when yields were continuing to rise. Yesterday, Andy Brenner of Nat Alliance said this about the 10-year yield, because we were saying, did you miss that high there to buy at a decent yield for the 10-year? Here's what he said.
And we have... Next week, we have $155 billion of treasuries. In January, we're going to have a huge amount of treasuries. So I would look to buy 10 years back behind 4%. In fact, I might even wait to 4.30 to 4.34.
And you think that'll happen January, February?
I think that will happen the middle of January. I think you want to get long before the next Fed meeting on January 31st.
Gene, I'm guessing you disagree.
I definitely disagree. He's right in the sense that we have a lot of treasury supply coming to the market. Definitely. But think about it. We have a huge amount of demand coming in. We've only had 10 weeks this year where mutual fund bond flow outflows we're seeing. Lots of demand on bond funds. Second of all, you also have the fact that Inflation, bond yields are well above inflation. Third of all, you have that this is an election year next year. Nothing's going to change around the budget deficit. We are going to see a lot of opportunities in bonds. So what do you do with bonds? Where are we buying bonds? We've been increasing our duration almost every quarter to take advantage of yields. We envision yields, the 10-year Treasury yield next year, maybe about 3.9 to 3.5%. If we have a recession in the second half of the year, which we don't think so, but if there is recession, we can see yields going below 3.5 on the 10-year. We are finding opportunities. The scary area, though, is high yield. High yield will probably do okay next year, but it's ignoring the fact that defaults are going to pick up.
Well, at the moment, we have borrowing costs still pretty high, and for growing companies, Tom, and I'm thinking biotech.
Yeah.
Biotech is growing. They need a lot of capital to develop these new drugs. Who knows if that's going to be a problem for them, but you say buy the biotech.
Yeah, the whole theme for 2024, and the biotech, the XBI index has done absolutely nothing for a year. It's been dead money. We've been waiting and waiting. All we had to do was wait for Chair Powell to get out of the way, and the inflation number this morning confirmed that he's going to get out of the way. And to what Gene says, as rates go down, biotech goes up, they can raise capital. So we're going to see more deals, just like we saw with Bristol Myers this morning. We're going to see more drug approvals, and the big pharma have unlimited cash, but they have no growth. They have patent cliffs, they have to buy the growth, and these biotech companies are trading at historic low valuations.
Well, I have historic respect for you and Gene for coming in on this Friday before the holiday. Thank you both so very much.
Thank you.
Gene and Tom, and have a healthy, happy one. Thank you so much.
Merry Christmas.
You too.
Thank you.